Okay, the purpose of this video is to show you how to do Unit 5, Activity 2, Assignment 1. This one is very similar to a assignment that we've done before. This is journal entries, and it takes into account HST. So if you think back to Unit 4, we had an assignment that was very similar where you had to kind of interpret some transactions and figure out what three accounts were affected by those transactions. The three accounts, one of them being an HST account, whether that's HST payable or HST recoverable, and then the other two accounts, which again, you had to interpret from the transactions. So this assignment is very similar. The only thing that's different is that these transactions are for a merchandise business. And so as we've discussed before, merchandise businesses are businesses that sell goods in order to make money. So they might sell books or coffee mugs or hats or any number of things, right? And in the past, we've done journal entries and we've studied accounting for service businesses. Service businesses, as we've said before, are things where you do things for other people and you get paid for it. Like if you're a lawyer, that's a service job. If you cut hair for a living, that is a service job. You get paid for doing a service, right? So this one is journal entries for a merchandising business. And what makes it different is that we're introduced to some new accounts or new styles of accounts that are unique to merchandise businesses. So what I'm going to do in this video is I'm going to go through each of these transactions, and I'm not going to do what I did in assignments before, where I basically just did the whole assignment with you. In this one, I'm just going to go through and I'm going to give you the particular account that might be new or that we might have never seen prior to this. That'll give you kind of a start. And then the other two accounts that are affected by the transaction should be accounts that you're familiar with or that you've seen before. So I'll kind of let you work through that. Excuse me. The only other thing that I'm going to do is the third transaction, the June 7th one. The description of it doesn't really make sense, or it didn't really make sense to me. So I'm going to go ahead and do number 3 for you, or I'll show you how to do it, and then you can take my answers for that one, just because, as I say, it's not that clear, and you shouldn't be penalized for something that's not all that clear. As I say, I'll go through these. I will identify whatever the new merchandising account is, and then you guys can figure out the other two accounts for each transaction. And as I go through, I'll try to kind of explain some things and maybe give you some pointers or some places that you can look for help on each one of these transactions. All right, so the first one, this is a sales return slip. So the description here is damaged merchandise was received from the customer. All right, so in this business, we sold something to a customer. It was damaged, or it wasn't what they wanted, or there was something wrong with it. So they decided to return it to us, which is fine. That happens all the time in merchandise businesses, right? And so the amount involved here is $480. Presumably that's what we are returning to the customer, plus HST. So as I said earlier, this one is very much like our HST assignment from before, or our journal HST assignment from before. So either HST payable or HST recoverable will be in play here. The other thing we should look at is this credit transaction. Credit transaction means that the customer paid us on credit. But then over here, it says note, goods have already been paid for. Meaning, even though they used credit, or maybe it was an accounts receivable type scenario, now the transaction has gone through and we received cash for it, or we received money that went into our bank account. So the money that we give back to the customer who's returning these damaged goods or this damaged merchandise will be returned to them in cash or from our bank account. All right, so just because it says credit transaction there doesn't necessarily mean it's coming out of our accounts receivable, because we do have this note about how it's already been paid for. All right, so anyway, since this is a sales transaction, we're going to have a sales return account. And so that's one of our new accounts, or new to us as far as studying merchandise businesses. And that's the one that I'm going to give you for this transaction. So the debit for this one is going to be not sales term, sales return. So the sales return account. And then, as I say, you guys can figure out what the amounts are going to be. This one is going to be a debit. I'll give you that. So you can figure out what the amounts are going to be and what the other two accounts are. When you're going through this, I recommend using the content section of this assignment. Unlike some of our previous assignments, D2L actually has a really good explanation of each types of these accounts in the content section. And then they also have good examples to show you how to do these journal entries. So for this one, sales return, if we go to the content section for this unit and activity, if you scroll down, maybe about halfway down the page, they start telling you what to do in each instance, or what to do with each type of account. So this one is a sales return. So it is number 4 here listed. And then they've got a good description of what the sales return is. And then also, as I say, if you click on this link here, they're going to show you a sample or an example journal entry. So you can kind of use these to guide what you're doing on your spreadsheet. All right, so I would recommend doing that. So once I give you these accounts that are being affected, these new accounts, or accounts that are new to us, you can then use this content section as kind of a guide as to what to do from there if you're not sure. All right, so that would be my suggestion for how to proceed on this assignment. All right, so that's the first one. As I say, you're going to have to do the other 2 accounts and the amounts. The second one, so this is a purchase invoice, merchandise purchase for resale for $670 plus HST, and it was paid for in cash. Okay, so merchandise purchase for resale. So our business is a merchandise business. So in order to sell things, we first have to buy things. So take, for example, if we're selling sweatshirts. If we're selling sweatshirts, we first have to buy those sweatshirts from a manufacturer or a wholesaler. And so hopefully what we're doing, if we're trying to run a profitable business, is we're going to try to buy those sweatshirts for a small amount and then sell them for a larger amount, right? So that's kind of the basis of a merchandise business. So let's say we're doing sweatshirts in this example. We purchased $670 worth of sweatshirts, right? And so the new account that is going to be used for this one is called the purchases account. Right, and that is going to be our debit for this one. And then there will be 2 other accounts here that you're used to. As I say, if you go to the content section, you'll see that they have a whole section dedicated to purchases, and they also have an example here to show you how to load that into the journal. All right, so that is number 2, or the second transaction for June 6th. The third transaction, okay, this is the one that I said wasn't all that clear and that I would actually do the whole thing with you. So this is a memo from our business owner, Jay Bolton. The owner paid for damages caused after a weekend rampage over a wedding ring. Okay, so I wasn't entirely sure what that meant, but basically the idea is, basically the idea is that the owner used business funds to pay for repairs to something. And so we just have to do a journal entry for that. And the amount is 250 plus HST, and it was done in cash. So since we're paying for repairs to something, we are going to debit our repair expense account. And the repair expense account would be one that we might have gotten in our previous assignments. It's not special to a merchandise business. In fact, this entire journal entry or this entire transaction is something that we could have done in previous assignments with a service business as well as a merchandise business. It doesn't have anything that's different about it. So the repair expense, and we are going to debit that because expense accounts always get debited. And we're going to do that for 250 because that's what the repair cost. And then we have to take into consideration the HST. In this case, we are paying for something. So this is going to be the HST recoverable account. And this is going to be a debit as well. Remember that HST recoverable is a contra liability account, meaning it does contrary to what you do with most liability accounts or other liability accounts. So if you are increasing your HST recoverable, it is a debit. Normal liability accounts, if you're increasing them, they're credit. So that's what makes this one a contra. And eventually this one will subtract from our HST payable account to make our check that we have to write to the government less. Because remember, businesses don't have to pay HST. So when we do pay HST out to other businesses, we get to claim those later on and use them against our own HST payables that we do have to send to the government. So that's just a quick reminder on that. And then the 3250 just comes from multiplying the original amount 250 by 0.13, which is 13%. And so we get that 3250. So that's how much we were charged in HST that we'll eventually get back. All right, and then the last one, the last account affected here is going to be our cash account because we paid for this out of the bank. And that one is just these two amounts added up. So it is 282.50, and it is going to be a credit. It's a credit because this cash is an asset account. Anytime you decrease an asset account, it is a credit. Right. And then the only other thing we have to do is write in our description of what this transaction is. And I just put paid for damages. As I said, not really clear from the description, so it's not a great one, which is why I'm doing this one with you. So if you have something like that for number 3, you're going to be good to go. Right. Good. The next one, the 4th transaction, June 8th. So this is from a sales invoice. Goods sold to Edward Thompson. So our business made a sale to this guy, Edward Thompson. We charged him $7,150 plus HST. And this was a credit transaction. All right, so those are our key pieces of information that we need to know here. So since this was a sales transaction, that is a revenue account. And so we are adding to a revenue account. So this one, our new account that you might not be familiar with or that's new to us because it's a merchandise account is the sales account. As I say, that's a revenue account. And we're going to be adding to it that $7,150 that we made from Mr. Thompson there. And then the other 2 accounts, as I say, you can puzzle over and try to figure out on your own. There's going to be a debit one before this sales. And then there's also going to be another credit one. So those are some hints there. Again, to figure out what to do here, if you're not totally sure, you can go to the content section and you can look for the sales section, which is right up here. It's number 2. So they've got a little description, and then also they've got an example there for you to use on your journal entry. Right, so that is the 4th transaction. 5th one from June 9th. So this is a vendor's credit memo. So defective products for resale purchased from XYZ Supply were returned. Okay, so in this one, and we returned it for $140 plus HST, and this is a cash transaction. All right, so this one, let's say we're running our sweatshirt business, and we got a bunch of sweatshirts from our supplier, XYZ Supply Co. And a number of them there was a problem with it. There was holes in the sweatshirts, the stitching was bad, the color was wrong, any number of things. So we decided to return $140 worth of sweatshirts back to the company that we bought them from, back to the wholesaler or back to the manufacturer, whatever this XYZ Supply company is. And so we send it back, and then we're going to get $140 plus HST back into our account. Right. So this is this style is a purchase return account. So I'm going to put that in here, and it's going to be a credit. So it's purchase return for $140. And then, as I say, there's 2 other accounts to be considered. It's going to be one of the HST accounts, either HST payable or HST recoverable. And then you're going to have one other account that will be the debit for this one. And so, as I say, this is purchase return, so you can learn about the purchase return. Let's see, number 7 in the content section. So if you look here, they'll give you a little description about purchase returns. And then they've got the example there, so you can check that out. I'm trying to see if there's anything else I need to mention about purchase returns. I think that'll do. Okay. All right, so that is transaction number 5. Transaction number 6. June 10th. Okay, this is a purchase invoice. The shipment of goods to a customer at our expense for $690 plus HST, and this is a credit transaction. All right, so this one is basically us delivering goods to one of our customers, and this is the amount we paid for that delivery. So it must have been something huge. To pay $690 in shipping is a lot, right? So I don't know what our business does necessarily, but it must be, the products must be big, maybe bigger than the sweatshirt example I was using. Maybe it's like pianos or something. Anyway, not to get lost in the details. Sorry about that. All right. So the account that's going to be new to you guys on this one, or that you may not be aware of yet, is the freight out expense. Freight out just means delivery out, or delivery away from our company, delivery out to our customers. And so that is going to be an expense account, the freight out expense account. This is one of our operational expenses, so the money that it takes us to do our business. And that one's going to be a debit, and that one's going to be for the $690, because that's what we paid in order to have our product shipped to our customer. All right, and so I'll leave you guys to do the other 2 accounts there, or the other 2 accounts that are affected. If you go to the content section, you're going to see a section for freight out. It gives you a little description about that, and then it also gives you an example there. And the last one, okay, vendor's credit memo. We were notified that we overpaid for an advertisement on the local radio, right? And we overpaid by $320 plus HST. This was a credit transaction, but like the first one that we did up here, we have a note which says goods have already been paid for. So although we paid them on credit, or we might have had like an accounts payable account set up for the radio station to pay them for our advertisement, we have since paid them. So we sent them money or sent them a check or something to pay for our advertisements. And then later on down the line, they found out, oh, hey, you guys paid too much. You paid $320 too much plus HST. So we're going to return that to you. And they're going to be returning that to us in cash. So that's something to keep in mind here. So even though it says credit transaction, the goods have already been paid for. So we're actually going to get that money back in cash. It won't just be refunded or taken out of our accounts payable account. All right. So this one, the relevant account will be the advertising expense account. This one, kind of like number 3, this one could have appeared in other assignments. This one's not really specific to the merchandising business. So you can kind of approach this one in the same way you would have other journal assignments from previous assignments. Advertising expense account, it's just a regular expense account like you guys have been used to dealing with. So there really isn't something that you can check it out against in the content section. Like I say, approach it like you would any journal entry that has a transaction where we're getting money back in our bank account. And then we're also recovering some HST, or we are getting back some HST. So that is the clue I'll give you there. Our advertising expense there is the $320, because that's the amount that that we had initially paid out for the advertising. All right. I think that's it. The only thing I'm going to do is, I think in those first 2, I didn't give you the amounts for the accounts that I gave you. So I'll go in there I'll go in and put those in just for a little bit of additional help. So in our first transaction, the sales return is going to be a debit for $480. That $480 comes from here. That is the amount that we are returning back to our customer since they returned some damaged goods. So we're giving them $480 back. Let's see. The second one, purchasing merchandise. So we spent $670 on our new merchandise inventory. So that's going to go there, 670 in the debit. All right. So hopefully that gives you some place to start with these. And then, you know, as I say, you can kind of consult with the content section and the examples in there, and hopefully it'll make it kind of clear what you have to do for the rest of the transactions. So identifying those other 2 accounts and how much you should be putting in those accounts and whether they're debit and credit and all of that. Obviously, if you get stuck after that and you need some additional help, please let me know. I'm happy to help you. And until then, I'll see you guys later.